to talk about what are support and resistances, right? How do you define support resistance? You know, what does it really mean, support resistance? How do you plot support resistance, right? So a support is an area on the chart from where the candles are most likely to reject, which also means there's a high chance for them to finish bullish, right? So a support is basically an area on the chart where price starts to go bullish. Make sense? Very simple. Very, very simple explanation, right? A lot of people are asking me if this session is recorded. I don't know whether you guys are mentally ill or you guys couldn't really see the post I put on Instagram. I mean, wow, man. This is just ridiculous. Ridiculous fucking questions. If you can't identify if this is being recorded, why are you even here? Why are you even trading? You should just stop trading, man, because either you're deaf or you're blind or you can't read. I don't even know, man. This is dumb questions. Anyway, so support. So let's say we have a support down over here, right? We have a support down over here, and then you have a candle that is coming bearish. You know, a candle is coming bearish. So is this a good time to take a buy? Is this a good time to take a buy? No, not really, because candles are coming bearish from up there. They're coming bearish. So the best time to take a buy would be to, like, when you wait to see when candle has closed bullish. This is when you're going to say, okay, like, you know what? Now, mind you, this is the 4-hour or the daily time frame. This is not the 30-minute or the 1 hour. This is the 4-hour or the daily time frame. Right? Whenever you have a daily time frame or a 4-hour at like creating a bullish candle, I always look at that in a way that, okay, maybe this is a support being formed. You know, because if this is a support being formed on the daily time frame, then what's going on the lower time frames? The lower time frames are in an uptrend. Make sense? If the higher time frame is making a support by a candle closing bullish, that means the lower time frame is in an uptrend. And all you got to do in an uptrend is to wait for a support to be formed, you know, like in a downtrend too, on the lower time frames, right? So when you have a 1 hour which is going up like this, you're just basically waiting for a pullback. Let's see here. Let me just bring my bearish candles here. You're waiting for a pullback, right? You wait for a pullback, and then you patiently wait for a support to be formed. And a support is going to be formed by a bullish candle like this in an uptrend, right? So if this is the daily candle finishing bullish, this is what the daily candle looks like. It's what we talked about in the previous slide. This is not something new. This is what we talked about in the previous slide, right? This is what something looks like. You have a support formed, and now you can anticipate the next candle to continue bullish, right? So if candle's going to continue bullish, where's the stop is going to be, right? Where's the stop is going to be? The stop is going to be below the previous candle. So we're going to talk about that in more detail too. But what I'm trying to explain is, what is a support, right? A support is where price moves bullish. That's what a support is. Whenever you're looking at prices going bullish, whenever you're looking at bullish candles, or whenever you're looking at any like bullish movement on the chart, you have to identify where is the support. Because if price is going bullish, man, it's going up from a support. This is the first thing you need to identify, a support. Let's take a look at the next one here. A resistance is an area on the chart from where the candles are most likely to reject, which also means there's a high chance for them to finish bearish, right? So resistance is the opposite of support. When you have resistance and you have candles at resistance, right, there's a high chance that the candles are gonna, like, you know, I mean, you can have a breakout or whatever. I mean, you know, it's not perfect. Things happen like this. There's a high chance that there's going to be a bearish candle printing at resistance. Now, here's the thing. The higher the time frame, the better. Trust me on this. The higher the time frame, the better. If you have a bearish candle forming on the 4-hour or daily time frame, that's a resistance. Even if you look left and it makes sense, that's your resistance right there. When that resistance is formed, and you have a candle that is closed bearish, especially a high time frame like the 4 hour, the daily, this means the smaller time frame candles, or the lower time frame candles, will continue to go bearish, and you can start to look for some signs for them to go bearish. Let's take a look here. So let's say that this is the 4 hour candle that closed bearish, and then when you translate that to the lower time frame candles, the lower time frame candles are probably gonna, like kind of look like, they'll kind of look like this right here. You have another bearish candle coming down, and then you're gonna have a bullish candle. Now, these are perfect scenarios, and after this, we're going to do some simulation work as well. So we're going to go over those things too, right? So you have bullish candles, they're going up like this, and you're like, okay, perfect. Maybe, like price made a low right over here. Price made a low coming down from resistance. So maybe this is the low here, and this is the 4 hour resistance. So all I got to do is wait for a candle to flip in my direction and possibly take a sell. Because once you have a candle closing bearish in your direction, then you could say, okay, you know what? I can probably have a stop above that candle and expect the next candle to continue moving bearish like this. That's it. That's all you're doing. That's all you're doing. You're just basing this on probabilities. What's the probability? If this candle has closed bearish in a downtrend, what's the probability for the next candle to continue bearish? It's a pretty high probability. That's all what you're doing. That's it. No indicators, no magic, nothing. You're just looking at the candles. You're trying to read the candles, right? So what did we discuss here? We discussed that a support is an area on the chart from where price starts to go bullish, right? And a resistance is an area on the chart from where price starts to go bearish, So whenever price is going bearish, you're always looking to see where's the resistance. That's what I always look at, because when you're trying to tell stories on candles, you're trying to see that, okay, if price is bearish, where is it coming bearish from? Where's that resistance? Support is found at the lows of a particular time frame, and of course the resistance is found at the highs of the particular time frame. This makes sense, right? When you have candles, when you have, let's say, the daily time frame, resistance is found at the top of that chart. Like you look when the daily is heading down, you look for a resistance because it's going to be at the top. But when the daily is going bullish, let's say daily or the 4 hour going bullish, then you look for support, and supports are mainly at the bottom. Higher the time frame, the stronger the support resistance. This also means that there's a high chance for a low time frame to be an uptrend or a downtrend. This is exactly what we just talked about. We talked about if the high time frame is bullish, the daily, or let's say the 4 hour or the daily is bullish, there's a very, very high chance that the lower time frame will also gonna be bullish. And that's what we talked about, that the candles are gonna, let's say if it's in an uptrend, candles are gonna go bullish, then it's going to come down, they will create bearish candles, and then you're going to see a bullish candle forming after these bearish candles in an uptrend, and you can say, okay, well, perfect. So if we're in an uptrend and this candle has closed bullish, maybe we can have a stop down over here and anticipate the next candle to go up. That's basically it. Like you're just looking at the high time frame. If there are 1 or 2 bullish candles, then you go to the lower time frame, and then you see that, okay, is the lower time frame creating highs or it's creating lows? Make a note of this. Whenever you're looking at the lower time frames, the 30-minute or the 1 hour, you're always looking to see if that time frame is creating a high or is that time frame creating a low, right? You need to really understand that, because if it's creating a low, there's a very high chance that that low is going to get retested. But if price is creating a high, that means that high is going to get retested again. Usually we look at the most recent support resistance on 30-minute, 1 hour, and 4 hour. Usually they coincide together. Now, what does this mean? This means that whenever you're looking at the chart, let's say you have a resistance. Some people are saying that you should go look at the real chart and whatever. We're going to do a simulation here later on. So, that's going to be a chance for us to maybe put all this in practice. Perfect. Yeah, we're going to do that. Perfect. So a good resistance is when the 30-minute, 1 hour, and 4 hour line up together. To me, that's a great resistance. Because when you're seeing that if the 1 hour candles are rejecting an area as resistance, that's a big deal. That's a big deal. And at the same time, if you see that the 4 hour candles are rejecting an area, that's an even bigger deal. So the higher the time frame, the bigger the deal it gets, right? At the same time, what you also got to keep in mind is that when you're looking at, let's say, the 30-minute time frame or the 1 hour time frame from an intraday level, this means that you're going to get trading opportunities, but they're not going to be a lot of trading opportunities, right? You're going to get less trading opportunities, but they're going to be high quality trading opportunities. But if you're looking at let's say the lower time frame, like the 15-minute or the 5-minute, you're going to get all kinds of trading opportunities, but they're all not going to be good trading opportunities. It's like when you buy stuff from China, you buy stuff from China, you get it for cheap, you get it in large quantities, and you don't know whether all that's going to work or not. It's a fact. It happens. And the same time here, when you're looking at the 15-minute or the 5-minute time frame, there's a chance that you will get very high quantity of trades, but the quality is not going to be there. Like the quality is not going to be there. When you're looking at the high time frames, you're going to get less quantity of trades, right, on the high time frames, but the quality of trades are going to be there. That's why people say that always look at the higher time frames. You always got to look at the higher time frames. All right. Very, very basic stuff, but people still don't understand this, so it's very good to do a recap like this. This is done by identifying the most recent rejections. So we're going to go over the most recent rejections here in the simulation that we're going to do later on. So that's going to be a very, very good learning experience there. Okay, let's take a look at some examples here. Perfect. I didn't know there were examples. All right. It's an empty screen. Oh, there you go. Okay, perfect. So this is a 1 hour chart of, what's this? 141.563. All right. What chart is this? Who knows what chart is this by just looking at the price? 141.563. Oh, nice. We got smart people over here. We just looked at the price. Oh yeah, that's GJ. That's GJ. Okay, perfect. So we have a chart over here, right? We have a chart over here, and what's going on here is that now you're looking at the candles themselves, right? You're looking at the candles. You're looking at this candle here. I don't know what's going on. This bearish candle, bullish candle. But what we got to see is we have to identify support resistance on this chart. That's what we got to do. We got to identify support resistance. So the first thing we got to do is we have to see that, okay, if all these candles, they are closing at this area, this must be support, right? This must be some sort of a support. So we have a support down over here, right? And then when we have, so now if you extend this extends to the next resistance, which was right over here, right? So we have this support, and then we had this resistance on the left-hand side, right? So now when you're trying to tell a story on candles, and you're looking to see that, okay, if price is consolidating here, where was it coming from? Where was the price coming from before it started consolidating? So you start backtracking the candles. Backtracking means that you start looking back at the candles. Okay, bullish candle, bullish candle, bullish candle. So when candles are going bullish, where do candles go bullish from? What's that thing called? And it's called support. Candles go bullish from support. Perfect. Nice job, Rakil. So this is support down over here. Candles were at support, and then they went bullish. They encountered a resistance, which was right over here. This was resistance, but candles didn't give two fucks. Look at this candle. It formed bullish, and it left a wick right over here. Now if this was in an uptrend, the next candle, it should have respected this low and continued moving bullish, which it did, which you see right over here. Once it moved bullish, right? If this is the 1 hour time frame, and you had all these candles to the left respecting this area as a resistance, and you have this 1 hour candle breaking out of this area, what's most likely to happen? That candle is most likely to respect that same area as support. Most likely. And it is right over here. For this candle to continue down, it needs to break below the support. So this example is just to show you, how to, look for support, resistances. So this is just like looking at the rejections, looking at where candles are turning, looking at areas where candles could not break up or they could not break down. Right? Let's take a look at the next example here. Merry Christmas. Okay, perfect. What's this? 1 hour chart. All right, what chart is this? Price is 121.522. Oh, nice. People are answering. Perfect. Good answers. That was quick. Okay, EJ, right? So now this is the 1 hour time frame, right? Is there a higher time frame over here? Oh yeah, so probably this is the 4 hour time frame here now too. So perfect. So we got the 1 hour and we got the 4 hour time frame. So now when we look at the 1 hour time frame, there's a lot of information here. So whenever you see a lot of information here, what you got to do is you have to go to the higher time frame, because this is a lot of information. This is a lot of noise. So you got to go up one level, and then on that level, you have to see simplistically, you have to see what's happening. So when we go to the 4 hour time frame, we have some more information, right? So when we look at the candles, we see that this is a bearish candle. This bearish candle is probably creating a resistance here, right? But if we draw a resistance right over here, this would make no sense at all, because there's an even better resistance, which is going to be right over here, which makes sense because now you have multiple candles that were rejecting this area 2, 3, 4, 5 times. So that's a better resistance, right? So now when price is heading down, you see here when price is heading down, where will price head off to if price heads down? If price heads down, where will price go? Price will go to the next support, So the support is going to be maybe down by this area over here. Where's my square? Down over here. That's your support, right? If that's your support, and now look what we have. We have a range here. This is a really, really good range that we have here, right? So we're going to draw a range here, right? This is a range. So we've identified our resistance up over here. We've identified our support down over here, and now price is ranging. Now can we take a buy at this point? No, because candles are bearish. We can't take a buy. We don't know whether the next candle is going to go bullish or not, because taking a buy right here, it's like saying, oh, you know what? I'm going to gamble on the fact that the candles are going to go bullish when the previous candle closed bearish. Right? Doesn't make sense based on what we just learned previously. It doesn't make sense at all. Can we trade the range? Red Faz, that's a stupid question you asked. We just went over this. Perfect. Yeah, a lot of stupid questions are going to come in. Okay. Another one. This is, what chart is this? 0.69. 69 in the house. What chart is this? I don't even know what chart is this. Okay, so we got two charts here. Perfect. So this looks like a high time frame and this looks like a small time frame. So now when we're looking at this chart, right, we're looking at the candles. Okay, whenever we're looking at the candles, we're looking at what story is the candle trying to tell. So this candle was bearish, then we had the bullish candle, and then we had, before that, we had another bullish candle, and before that, we had a bearish candle, and then we had a bullish candle. So maybe, so after this bearish candle, we had a bullish candle. This means it's at a support, right? So we're going to say, okay, well, we're not very smart, so we're just going to draw a support down over here. Okay, perfect. We have a support. And now when you see that, okay, now this candle is forming bearish after this big bullish candle, this means it's at a resistance. Make sense? So now we can say, okay, perfect. I guess we have resistance here. That's it. Right? So now, there's another note. If people can make that note, is really going to help you. Is the first step is to identify the most recent support and resistance. That's the first step. The first step is to identify the most recent support and the most recent resistance, right? So let's take this, for example, right? If let's say someone takes a sell over here, right? There's a 50-50 chance that price is going to go down, and there's a 50-50 chance price is going to go up, right? But if you're trying to take a sell, a better sell is going to be below this area. Because if you take a sell below that area, what's step number 2? Step number 2 is you're going to make sure you know what's the next target. So when you start looking left, when we start looking left, we see, okay, maybe the next target is going to be this wick right over here. That's it. That's the next target. Or eventually even, this area here and then maybe down over here. But you're looking at the most safe first target. The safe first target is going to be that wick we pointed at. But if price breaks above resistance, the next target is going to be, probably we'll have to look further left to see where the next target is going to be. Right? So let's go to the next slide here. I think next slide was the high time frame. Yeah, this is the high time frame here. So now I think this is the daily time frame, because if you look at the highs and the lows, you see there's a big difference there in the daily. You see that? A little bit, I don't know what I'm talking about. I wish Raja was here to help me out. Okay, perfect. So you have the daily candle which closed bearish. So now we got to tell a story. You have this candle that closed bearish, and then you had the previous candle that closed bullish. But look what it did. Look left. Look left what it did. It closed above these candles, and it also closed above these candles. So maybe this was resistance here. So we're now drawing the most recent, resistance, which now turned to support. Right? Makes sense? And now what's going on is now we have the next resistance up over here somewhere, which we saw on the lower time frame in the last slide. But essentially what we see right over here is that price did indeed break above this resistance and then another resistance, and now it's trying to create a support. Right? This is very simple. We're just making sure we're looking left to see where is going to be the resistance and where there's going to be a support.